Hello everyone. This is the pre-market report video for today, 9th June 2025 for the Indian stock market in terms of Nifty and Bank Nifty. First, let's have a quick recap of what happened in US market on last Friday. Before their market opening, US Department of Labor released all important job-related macros such as month-on-month basis average hourly pay increase, non-farm payroll data and unemployment rate. First, on month-on-month basis, average hourly pay increased by 0.4%, higher than the analyst expectation 0.3% and higher than April month 0.2%. This is the first good economy macro. Then second, November month non-farm payroll addition came as 1,39,000 jobs against expectation of 1,26,000 job addition. Last Wednesday, there was a huge pressure in US market because of the private payroll company said on May month, US added only 37,000 new jobs. That made the investors very worried. Now it seems that's not the case. As per government official data, new job addition added healthy numbers more than analyst expectation and more than twice the number of private reported value. Hence, from economy perspective, this also very good. Then final more important one, unemployment rate came as 4.2%, which is in line with the analyst expectation and same as April month. So clearly all the US macro released last Friday was really good. On the slight negative note, this will reduce the chance of Fed future interest rate cut this year, but market didn't look on that way. It opened around 1% gap up and maintained around there throughout the session. In addition to this good macro, Trump Secretary Scott Bessent said that US trade representative and the Chinese representative is going to discuss about the trade deal today in London, which all added the positivity in the US market and closed on the positive note. In the end, Dow Jones increased by 1.05%, S&P 500 was up by 1.03% and Nasdaq marginally outperformed the other two and increased 1.2%. Another important thing to notice, after near 4 months, for the first time, S&P 500 closed above the psychological 6,000 mark. In case of VEX, it decreased 10% and from near 18.5, it dropped to below 17. About oil, the number of oil and gas rigs that digging oil in US fell to the lowest number since 2021 in conjunction with the Canada wildfire. Oil price increased by near 2%. Brent crude closed at $66.5 per barrel and WTI crude increased slightly above $64.5 per barrel. Regarding Indian ADR, in line with the US market positivity and Indian market positive close with respect to RBI rate cut, which we discussed in detail in the last week ahead video, all of them closed positive of 1 to 2.5%. However, if we calculate the arbitrage, IT ADR indicating it's trading in parity with some negative bias and banking ADR indicating furthermore positive arbitrage of 0.5%. In simple, IT flat with negative bias, banks positive. Then coming to GIFT Nifty, on Saturday early morning it closed at 25,153. At present, the premium is around 90 points, equating to the spot. For now, it's indicating gap up opening of around 40 to 60 points. So those were the things happened on the global market after the Indian market close. Now coming to Indian market related info. First, about institution, last Friday both FII and DII were net buyers. FII net bought for only 1,000 crore rupees, whereas DII net bought for massive 9,350 crore rupees. Honestly, I don't know the reason for this DII massive net buying. If anybody knows about it, please let me know in the comment section. Moving to the derivative market open interest analysis, last week because of the weekly expiry, 46% of the call option open interest and roughly 32% of the total put option open interest were unwound or expired. On that, in the put option case, more number of open interest than the unwinding, like 38% were added newly on Friday, in one single session. Whereas the call option open interest addition was only 24%. Meaning open interest addition was primarily driven by put options. Then if you see in depth, predominantly proprietary traders sold those put options and client or retail traders bought those ones. Whereas on the call side, it's opposite. Retail people sold the call options, but proprietary traders bought those enormous call options. So considering those, at present proprietary traders holding volatility adjusted net 5% of their open interest on the bullish side, and retail traders holding volatility adjusted net 5.5% of their open interest on the bearish side. FII as usual, they are neutral in options and super negative on index future and positive on index stocks. If required, please pause and have a look. This is the index future stance for different participants. Please note here the number of open interest for retail traders and proprietary traders in index options is at least 40 times higher than the index future. So index future position won't change their stance massively, and also it's for monthly expiry. Overall, proprietary traders makes more money if market goes up, whereas retail traders are betting against it. Regarding FIA, they are just neutral as they were simply using options for hedging purpose. Then regarding stock specific, during weekend, Director General of GST Intelligence has closed pre-show cost notice worth for 32,400 crore rupees, which they opened against Infosys a year ago. So it's a huge relief for Infosys. So we can expect Infosys will be on focus today. Then on the slight negative note, one of the reputed global investment firm Nomura released the report that because of this massive RBI rate cut, they are underweight on rupee asset, which obviously is not good. So we can potentially see this influence today. As a summary, US market closed positive, banking ADR indicating further positive, Infosys having the potential positiveness because of this massive GST case closure, and Saturday GIFT Nifty is indicating the gap up opening of 40 to 60 points. Those were the positives. On the other hand, negatives, this Nomura warning about the rupee influence because of rate cut, which potentially scares away the FII further. And at present, US future market is trading marginal negative. Moving on, from the stock-wise open interest, Mankind Pharma, Mastock Shipping, IRADA, Dauber India, KPIT Tech, HAL and CG Power are some of the 31 stocks that got an increase in open interest along with the decrease in price, indicating the short build-up. On the other hand, Blue Star, PNB Housing, Fortis, HDFC AMC, Bajaj Finserv, IEX and Hindustan Zinc are some of the 92 stocks that got an increase in open interest with an increase in price, which is indicating the long build-up. About the things to look out, early morning lot of Japanese data is due to release like GDP growth rate and other economy related macro, so those might influence the Asian market opening. In addition, China's consumer inflation is also scheduled to release around 7 am. Then there is not much I'm aware of before and during our market hours, but in the night for US, May month consumer inflation expectation and New York Fed 1 year consumer inflation expectation are some of the important things we need to keep an eye out today. Coming technical, last Friday Nifty opened flat and had consolidation until 10:30 am, but after the RBI interest rate decision, it gained momentum and closed above the psychological 25,000 mark. Thus on the daily chart, Nifty formed a long bullish candle and continued its higher high higher low formation. If we consider the last 3 sessions candle, all together formed the 3 white soldier formations, but the problem is it formed with the last 3 months below average volume. So this could be a potential trap. However, Nifty is trading well above the all key moving averages with RSI moved above the 60 mark, all indicating the positive trend. Hence, on the higher side, if Nifty is sustained above the 25,000 mark means, then the immediate resistance is at 25,200. On the downside, immediate support is at 24,850. A breach below this level may weaken the current rally and could trigger some profit booking. In case of Bank Nifty, it opened 60 points gap down and it had the similar price action but much better than Nifty, then closed at around 56,580 after breaking out of several weeks of consolidation. Thus on the daily chart, Bank Nifty also formed a long bullish candle following a breakout from the resistance trend line. In addition, it climbed above the upper line of the Bollinger Band and traded well above all key moving averages with RSI showing positive crossover. Hence, now Bank Nifty has to hold above 56,250 zone for an up move towards 57,000, then 57,250 level. While on the downside, immediate support is at 56,250 and then 56,000 zone. As per the weekly options data, the maximum call option open interest was at 26,000 strike, followed by 25,500 and 25,000, with the maximum new call option rating at 25,500 strike and then 25,600 and 26,000. zone. On the put side, the maximum open interest was at 25,000 strike, followed by 24,800 and 24,700, with the maximum new put option rating at 25,000 strike and then 24,900 and 24,800. Thus, from options data, 25,000 level is expected to be the crucial zone for further direction, with likely resistance at 25,500 and support at 24,500 to 24,700 zone. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI research advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.